Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I am the aggressive growth stock strategist. And I've got two more stocks for your aggressive growth radar screen. So let's get right to it. The first one we're going to do is UiPath. And the ticker for that, UiPath is the name, and PATH is the ticker. It's a Zacks Rank number one. That's a strong buy. And it's got the growth divergence that I love to see, an A for growth, an F for value. That tells me right away I'm on the right path as an aggressive growth strategist. As we look at the chart here, we notice the line moving the wrong way. Oh, isn't that terrible to see? Well, here's the idea. This is one of these names that if you, at the beginning of the year when the AI craze was bidding all these stocks up, this is one of the names that Google gave you very quickly as to, hey, this is an AI stock. And we can see that the retail investors plowed into this stock, and it came right back down. And now is probably a good time to get this stock on your watch list because it's around $20 a share, down from 26. And it did post a beat most recently. All right, let's go ahead and look at the numbers that we always look at. Are they beating the number? That's the first question. And resoundingly yes, but problem here is that these are smaller surprises. On the good news here, especially after this quarter, 9 cents, 11 cents, 9 cents, then we start moving up 12 cents, then 22 cents. So we got bigger absolute beats, smaller on a percentage basis. Some of the hot air is definitely out of the bag in this one, obviously, along with the stock price moving in. All right, what's going on with estimates? Going from 10 cents to 12 back to 11, but we're going to count that as up. 9 cents to 10 cents. 49 cents to 57 cents for this year, 66 cents up to 67 cents. Mild expectations there for your estimate revisions. Are we growing the top line? That's the main concern. And we got 15.8% this year and accelerating to 17% next year. So we've got a lot of the boxes checked for this one. Let's check out the valuation, which is always key. 34 times forward earnings, which is a lot, but it's right up there with where the growth is. So you're paying close to your growth rate. 5.5 times book. This is going to be an asset slim model, and the market really values each dollar of sales, giving it almost 8.5 times. You see operating margins on the negative side, but they're moving in the right direction. All right, let's see how the chart looks for this stock, and we can see it's not necessarily great. This thing came out and it was super popular, but it all came in the tech wreck of 2022. It's been trying to move up. It moved up early in the craze and has come back down. So that's your stock. But here, importantly, is what earnings have been looking like. They have been moving steadily higher at a very high clip, and really, the difference between this line and that line is called your earnings growth. There is earnings growth ahead in 2025. All right, that's it for Path, UiPath. Let's go ahead and jump to our next one. And this is WEAV Communications. Right through the name so you can't read it. That was a good one. All right, so it's WEAV, W-E-A-V, W-E-A-V. That's the ticker. It's a stock. It's a Zacks Rank number one, strong buy. A for growth, F for value again. We can see on our chart it's just a little bit better here than it was for UiPath. But we're going to get that kind of line going, a little up, little down, little craziness. But let's go ahead and take a look at the numbers that this network software company has. Are they beating the number? Yes, and bigger beats, and a nice big beat. But we're just inching close to profitability, just can't get there. So, when that thing flips to profitability, we're going to have a good time in this stock. But the problem is it doesn't look like it's going to be anytime soon. Estimates holding at 2 cents here, a loss of a cent here, an improvement from a loss of 5 cents to a loss of 3 cents. And then next year, we go from 8 cents to 10 cents. So we already know our PE multiple is going to be sky high because it's a very small number going forward, if there even is one. Are we growing? Well, 15.5% this year, 15.5% next year. not quite an acceleration. We need to have that little bit of acceleration to make that really meaningful. All right, as guessed by me, there is no forward PE here. So we've got an NA there. We're looking at a price to book of 9.7 times, price to sales of 4.6 times, 21% top line growth in most recent quarter. So that gives you an idea that we could see higher growth going forward. Our margins are obviously negative here. So we've had pretty much the same chart as UiPath. It came in quite a bit, but it has been recovering nicely. And we can see that the beats have been good here recently. And as we look at the earnings trends are strong for the most part. So the lines are suggesting the stock has plenty of room to grow back into the mid-teens. All right, so that is WEAV Communications. Well, that's it for this week. Be sure to join me next week when I put 2 more stocks on your aggressive growth radar screen. And until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.